It's an absolute fact. The Federal Reserve has created a system of perpetual debt and the inability to ever reverse their policies while maintaining order. But of course, this was always the intention. Ensure that people are indebted through the system that they have created. Then create a crisis every few years intentionally by drying up liquidity. Use the crisis to have the elite buy up assets for pennies on the dollar. It's a genius plan. You came here for the truth, so let me unveil that for you today. We're going to talk about the Federal Reserve, what they're planning to do. I'm going to show you what's happening in the stock market right now. Then after that, I'm going to cover a series of different issues very quickly to end the video. Let's begin by taking a look at Apple stock. Everybody was waiting for this because we saw what happened with Facebook. We saw what happened with Twitter, and the market has been waiting and seeing what happens with Apple's earnings reports. And of course, it was very, very good. So it beat the expectations. They did such a good job. Pat on the back. And here the stock has risen in the after hours. I'm sure we will see tomorrow, at the time of this recording, tomorrow's trading session to be very positive, because this issue as well as the trade issues are supposedly so fine yet again. So I think that the other stocks are going to have a positive trend in that trading session. Looking at this here, the reason why stocks have risen in the first place is because central banks have decided that this would be a good thing to do and print a whole bunch of money and buy up shares. Weekly equity returns versus the Fed balance sheet change. And what I do notice, the complete correlation, not just within the Fed, but with the stock markets in general, just particularly in the US stock market, that when the central banks, here we have the Fed, the central banks buy up more of this toxic garbage, the stock market will rise. When they sell, tends to go down. And that's just a very, very simple observation that we can see here based on how much they buy on any given month, how much they sell on any given month. And actually, I'll show you in a moment here. I think I have the calendar, which will show us a little deeper detail, but I wanted to show you in this graph first. You'll see where it's happening, where it's declining. I've shown you the charts before, but essentially it's very clear to me what they're doing. Now, they're not necessarily buying up shares directly, although behind the scenes they might be doing so. I don't even need to look at that because I know that there are central banks out there who are essentially a hedge fund, and they have been buying up equities. For example, the Swiss National Bank, they have bought billions and billions and billions of stocks like Apple. And I want to dig into that more, and I want to show you more of those in the future. Definitely, those are always good videos to do. But look at this. You can see the schedule. So we know in advance of when this is going to happen. On August 1st, we are going to have quantitative tightening to the degree of $24 billion. And this is a significant amount, no matter how you slice it. Looking at this, 2 weeks later, another 12.6. So we'll see that the stock market is going to be negatively impacted by this. Not in necessarily, overnight, but often that is the way it goes. On those trading days, the market tends to come down. But what I do see is a continued weakness throughout the market with fewer and fewer stocks. We can see that with the market breadth being really at a terrible scenario right now for the future of stocks. Looking at this, you'll see the schedule. You can make based on this addition here, if we take all of these negatives added up, we can see that over the next little while, another few $100 billion is going to come off of their balance sheets. I think it's too slow, but this in combination with other central banks around the world, if they taper as well as they suggest, we're already more than halfway through. They suggested they were going to taper $1 trillion worth in 2018. They're way behind schedule, but Either way, there is definite stagnation that has already appeared since the beginning of 2017, and we've barely scratched the surface on how much these central banks have on their balance sheets, all right? So I wanted to touch on another issue, and that is the fraudulent actions that go on in this financial system. And this sometimes we do get little pieces of information that come to light, and I'm really grateful for when we do get that, even if it's from one of the institutions that's on the inside. All right, so there's this loophole that Fitch found, and they're suggesting this may be widespread. Of course it is, but I wanted to just quickly touch on to what they have shown us here and the reason why. The use of an accounting loophole allowing companies to extend, quote, payable days by the use of third-party supply chain financing without classifying this as debt may be on the rise, according to Fitch. We believe the magnitude of this unreported debt-like financing could be considerable in individual cases and may have a negative credit implication. Now, is this going to be the next trigger for the financial crisis? I don't know. I don't know that. But here we have another sort of derivative that we can look at in all these historic cases. It's always some sort of strange derivative product or some sort of garbage that's being sold out there, or it's some sort of insurance on something that doesn't exist, and so on. And this always causes a problem. Maybe it isn't the catalyst, but maybe it eventually leads to it. It can always work like that as well. Now, what they call this is reverse factoring. All right. And this, to me, shows the way it works is you hire a bunch of PhDs that don't know anything about finance to create complex calculations and formulas, put them into some sort of investment somehow, and then make a profit off of it, and you don't expect that to come back and bite you in the behind. Well, I guess we're on a different page. This right here is switching gears, by the way. China. Retail sales year over year has been declining to a level that is quite dismal compared to where it was even after the financial crisis. The growth is just slowing down, and I needed to bring this to you. I didn't want to have a whole video of things to put together for China, and by the time I get it to you, then it'll be outdated. So this right here is the IMF. They had another report talking about Greece and their problems. I completely agree with their analysis. They suggest that, we've got a problem by 2022 in Greece, and they're going to have to ask for more money. That would be QE4 for them, or let's call it a fourth bailout for them. I don't know how it's ever going to last until 2022. I think that's a little bit ridiculous, but I just wanted to show you this right here. They suggest that they're going to be growing at 2%. I don't know where that comes from at all. I really don't. But then again, we'll see. More Americans are forced to reside in their vehicles. Here we have it. So a lot of people are unemployed, living in their vehicles. I've seen some amazing things actually on YouTube where people have converted vans and they're living in RVs and things. That is really saving people a lot of money, and obviously they feel less of a burden. There's positives for this, but I think that where I have a problem is that a lot of people would prefer to be living in a house, in an apartment, condo, whatever. They can't afford it, so they're living in their vehicle, and that right there is heartbreaking, number one, but it is in fact the truth for a lot of people. There's this factor. A lot of that is happening on the West Coast, definitely, but it's everywhere. It's going on, just becoming truly an epidemic. Last but not least, wanted to show you this here. If you want to see the video for yourself, you can go to the sources of this video, click on the link that'll be there to bring you up to the source to show you this. But essentially we have this surveillance drone designed to be put on patrol in a building, and then they would go around autonomously, completely autonomously, and they would basically notify a human being if there's any sort of warning sign. I guess this would be during off hours where it can patrol around. Like, you don't even need a person to physically be at the building anymore. This is all about cost savings. This is all about increasing productivity, and yet more jobs will be displaced by this. You're going to have those security jobs going away, people working behind the desk, behind the camera somewhere. Now that person could be in a completely different country and outsource those jobs. Or you can have an individual working from home, then you have less need for, all along the line that goes into different aspects. I won't get into it. That's all. If you found the video informative, please give me a thumbs up. And if you want the financial education that you were not taught in schools intentionally, well, then these 2 books have it all. You can see everything you need to know in these 2 books, all the way from the foundation and the history and the 4 asset classes. Then I get into how to actually use this information to profit from it, okay? So these 2 books work together in sync. They fit into each other like puzzle pieces because they do touch on the same points, but ultimately I get into some different detail. You can flip through them in the link in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.